Hi traders, you're welcome to my channel. I am OT Josh. Now in this video I want to talk about how we can use volume and price analysis, how we can use validation and just these things about volume. And right now as I'm speaking with you, I have seen a signal, and after this candlestick I will be trading, but I need to explain to you one strategy involving volume and price analysis. This is one of those strategies. Now, one of my students asked me, how do I know weak hands? How do I know strong hands in price analysis? I would do my best. I'll just explain a little bit with this example that I am giving. I'll explain a little bit of what weak hands and what strong hands mean in volume and price analysis. So after this, I'll be going for a 2 minutes put trade. I'll tell you why. When I do the trade, I'll be explaining why I did that trade, and I'll tell you why went for 2 minutes. So let's wait. Okay, so 2 minutes to the downward direction. Okay. Now at the end of these 2 minutes, you will find out that the market will close below my entry point, and I will tell you exactly why I'm doing this put trade. Now, let me tell you, this is a ranging market. If you look at this, it's a ranging market, although it has a kind of upward pressure, but it's still a ranging market. In other words, the price is moving from the support to the resistance to the support. The price is moving inside something like this box here, and the market is moving inside that box, and here is a support, here is a resistance, below here is a support. Right now we have volume. Now this strategy, what I want to explain now, is even a novice can do this. This is one of the simplest strategy that involves volume and price analysis. So what we do is we look at the volume bars, right? Here are the volume bars. Let me show you. I will take three volume bars like this. Let me see. For instance, I have one like this, a small bar. I have another bar like this, two, which is bigger than the first, and I have another bar like this, three. Now, with these three increasing volume bars, we have a valid, this is how it should be. We have a valid price action. These three bars is telling us that whatever you are seeing in the screen is valid. Why? Okay, that's the trade. These three bars is telling us that whatever you are seeing, whatever price action you are seeing is valid. This is what these three bars are saying. Now, it is left for the trader, it is left for me and you to have a good understanding of price action. Now, I believe most of us, we understand what price action is, candlestick patterns, and how they interact with key levels, retracement, pullback, and all of that. This is what price action is. Now, what the volume tells you, that whatever price action you are seeing on your screen is valid. That means this is the true. This is what we mean by validation. Now, if this is the true, remember we have two participants. We have up to 4, 5 different reasons why traders trade: urgency, fear, greed, and all of that. But in all of these, they are all broken down into buyers and sellers. So when you see three red candles like this, it means that in your chart, for instance, this is the volume bar. In your chart, you are going to have three candles also. One, two, three. Now, this is what this three candlestick will represent. This is just a rough sketch. By the time I start doing deep explanations, I'll try to explain these things better so that you see. Now, when you have a condition like this, three candlestick going downward, three volume increasing, it tells you that yes, the price action you're seeing is true. Now, what you want to see now, this is where the weak hand understand, weak hands are those people who are not well informed, number one. Weak hands are like people who have very little amounts of money to influence the price and they trade emotionally. Now, strong hands are maybe the institution, the big banks. Strong hands are mostly experienced traders. Now, for those of us watching this video who are not yet profitable, we may be weak hands trying to be that strong hands. Now, this video, this explanation is what I'm trying to let you know so that you find yourself inside this price action and know what you have been doing so that you can change that orientation and do what I have been doing. So in this case, let's say I am the strong hand. Why am I the strong hand? Because I've seen three candlestick falling, I've seen three volumes rising. So I understand that the strong hands are in the market and I want to trade with them. But before I can trade with them, in trading in trading, for you to win, someone else on the other side should be able to take the losses. That means someone else's losses becomes your winning. So for this trade that I have just made with $1,000, if there are 20 people or if there are 10 people that have traded this same trade with $100, what they've done is they've given me their $1,000 and I've also placed my $100 for each of these 10 people, and we both placed our money. I believe the price will go down, they believe the price will go up. Now they've placed their money and the price came down. The broker gave me the $1,000 and the broker took his own percent, like I think 17% of my 1,000, and he gave me back $830. Now understand, the weak hands were those who lost because they don't understand. And the weak end is like you listening to this video now who wants to improve. You still have the mindset, you still have the understanding of weak hands, and this is why you must listen to this. Now, how do I, since I know that these three candlesticks are valid, and how do I know if the candle will be going up or down? It depends on the market condition. So if this is a ranging market, even if I'm seeing three red candles and three increasing volume, there are rules guiding a ranging market, and those rules is simple, that price moves along like this and like this, like this and like this. Now remember, the market we are trading is not like real life. Yes, it's exactly like real life. You don't make the rules of life, you only obey the rules of life. You don't make the rules of the market, you follow those rules. So in the daytime you can work and at night you sleep. This is what happens in the market. In a ranging market, don't try to trade like you are in a trending market. Now, this is the hallmark of a ranging market. Price goes between support and it comes to resistance. It goes between support and resistance. Now, in a trending market, price will move like this, like this, like this, like this, and like this. This is how trending market. Ranging market is most like this, like this, like this, like this, like this. Okay, now I have three candles coming down. I have three volume here. Now, what these three volumes are telling me that are increasing is not about this downtrend is strong. No, it's telling me about the market condition, that the market condition is true. It's telling me that whatever market condition you are seeing, it is true because the volume is supporting it. Understand, when I say volume and price analysis, I don't mean volume and candlestick analysis. I mean volume and price. What is price? This is price. Price is always at the edge. This is price. That round number you are seeing, it's price. It's always there. So when I'm marking this key level, this is a significant price because buyers and sellers interacted there. So this here is price. So volume price analysis tells me now that this price is still valid. If it were not valid, the volume would not have increased. So even though this market is coming down, It's telling me look at your candles, look at your chart, and obey. You can now obey the market condition. What is the market condition in the ranging market? It moves from up to down, from up to down. So when this market comes down, it tells me that it is time to go. Even if this volume is increasing and the candlestick is falling down, you need to obey the market condition and follow it. This is just how it is. Now, where does the weak hand and the strong hand, where does the weak hand come in? Assuming we have a downtrend like this, and we have theory increasing volume, always make sure theory increasing volume, that is the minimum. You have theory increasing volume and theory candlestick falling down. Now you know that the markets will, in a trending market, this means that the markets will continue going down, because trends, how do trend work? Like this, it doesn't go back. You should obey the sentiment of the trending market and the ranging market. You need to work with them. Now, in the trending markets, when you see theory candlestick coming down like this, what you now do is to wait for the weak hand. Who are the weak hands? The weak hands will come in form of weak buyers. Let me show you. Buyers will now come into the market, and that is what most people will say a retest or a retracement. You see weak buyers like this, and in these weak buyers, you find out the volume. We have three increased volume. You find out that this volume now is going to be weak as well. The moment you find this like this, the volume is going to be weak. You can go to, if there is a key level, for instance, there is a key level here, you can go 2 minutes put. If there is not a key level, maybe the key level is somewhere here, then when you know that the market will go down and it will go up like this, and then before it goes down, when there is a key level here and you see 1, 2, 3, you see this candlestick, you don't trade. Wait for the market to come here. Don't be too in a hurry, because by the time you trade here, the market might still want to come up here. So this kind of pattern, you look for them when they are close to key levels. That is exactly what has happened here. I will show you where are the theory rising candles, the theory rising volume, sorry. I will show you now. We um have this. Okay, we have this candlestick one. Here is the volume. Small. We have the next candlestick two. Here is the volume, bigger than the first. We have the next candlestick three. Here is the volume, right? Bigger than this previous two. Now, this three candlestick has shown me that this ranging market is what? Valid. It has shown me that the ranging market is okay. I can follow the rules of the ranging market. What are the rules? You do put at resistance, you do call at support. Now, when you get this theory candlestick, all you have to do is to look for the next candlestick with a lower volume. And what did I see? Low volume, lower than the previous. So I went for the put trade for 2 minutes. And I got this in the morning. Now, let us assume that this kind of candlestick, this theory candlestick, or 1, 2, 3, is happening at this resistance. If this same pattern is happening, so let's say I have a green candlestick here, I have, so that you understand, I have another red candlestick, I have another red candlestick here, with theory increasing volume, and then this last candlestick, I'm seeing it here. Do I go for a put? No. Why? Because I need to understand that I'm in a ranging market and I will obey the laws of the ranging market. I will obey the laws of the ranging market. So in this case, how can I interpret weak buyers and weak sellers? Because for the market to go up, somebody has to take the other side. In my real trade, the real trade I took, we needed for us to take this put trade, we needed weak what? Buyers. And where are the weak buyers? This week here. These are the weak buyers. In this place, we need weak sellers. Where are the weak sellers? This same weak that's representing weak buying pressure, it will represent weak selling pressure here because it is in the buyer's area. Why would this represent This wick will represent wick. Let me show you, like this wick here. You know there is a wick here. It will represent wick selling pressure. Then buyers will come in. Why this wick here will represent weak buying pressure, sellers will come in. This is just how it is. This is a simple method to trade, especially for beginners. If you have a pen and paper, you can go back and write everything that I have said and test it on your own. You'll see it over and over again. In a ranging market, the market will go from support and resistance, and you can trade from those places. In a trending market, it will pull back to support and resistance, and it will trade from those places. Now, that is the direction you should focus your trades on. To get the candlestick, you need three increasing volumes to confirm that market condition. When you get the next lower volume of the opposite candlestick, or weak buyers or weak sellers, depending on the trend, you can now go for 2 minutes in the direction of the trend. It's as simple as that. Right? So for instance, we have this candlestick, and this candlestick. Let me show you. We have this candlestick, and this candlestick. Now let us look at the volume. Look at the volume. Can you see the volume? 1, 2, 3 rising volume. Now the next candlestick came down. This now we are saying this is a weak sellers. These are weak sellers. Why are they weak sellers? Because they are in the resistance, they are in the support demand zone. How do we know this is the demand zone? This is one and this is another. Bollinger Band 2 is here. So immediately I see these weak sellers, what do? I'll go for 2 minutes call trade, or even since it's in a strong demand zone at the very bottom, I can even go for only this 1 minute or even 5 minutes. No matter what you are doing, this is a good trade. So for 2 minutes from this part, you have 1, this thing is 2, you've won. So you can see that you took a trade here, you're taking another trade here. Why? You don't take trade at the middle, because at the middle it is neutral, so you don't trade. But here now, you can see how it happened. 1, 2, 3 candlestick. 1, 2, 3. Increasing volume. Wait for weak sellers in the buyer's area. Wait for weak sellers. Now, for instance, if this next candle was a green candle, that green candle, you interpret the upper wick now to be the weak sellers. Now, in this candle, red candle, I'm interpreting the lower wick as a weak buyer. In this candle, I'm interpreting the lower wick as weak buyers because I want to go selling. I hope you understand. If you don't understand, leave your question in the comment section. Don't text me the question, just leave it in the comment section. I will reply you. And this is why I'm asking you guys to get the ebook. If you want to get it, you can send me a message with the link in the description of this video. So until next time, bye.